You just lost everything. Not slowly. Not with warning. In 40 minutes. $122,000 per coin. That was what Bitcoin was worth when you went to bed. By the time the liquidation engine finished its work, quietly, automatically, without a single phone call, the number on your screen was zero. $19 billion, wiped from the global crypto market in a single night. 1.6 million accounts closed by machine. And somewhere in that number, somewhere in that mechanical carnage, was everything you had built over 3 years. The screens are still glowing. Your coffee is still warm. The liquidation notice arrived at 9:17 p.m. Eastern on Friday, October 10th, 2025, and it used 11 words. Your leveraged position has been automatically closed due to insufficient margin. 11 words, 3 years. Let's go back to the beginning. Because to understand how you ended up here, you need to understand the world you were living in, and how good it felt to be wrong about everything. The autumn of 2025 was, by almost any measure, the greatest bull run in crypto history. Bitcoin had hit a record high of $126,000 on October 6th, just 4 days before the crash. Not 80,000, not 100,000, 126,000. The total crypto market cap was sitting above $4 trillion. Institutional money was pouring in through Bitcoin ETFs. Trump had signed an executive order allowing digital assets into 401k retirement plans. The word supercycle was appearing in every newsletter, every podcast, every breathless Telegram group you followed. The narrative was airtight. This time is different. This time, the money is real. The institutions are here, and the floor is higher than any previous ceiling. You believed it. Everyone believed it. So in late September, you make your move. You open a leveraged long position. 5 times leverage on Bitcoin, meaning every 1% the price rises, you make 5. It sounds careful, almost conservative, compared to the 50 times and 100 times positions other traders are bragging about online. You run the math, you set a stop loss. You feel like a professional. The first week is quiet. Bitcoin drifts sideways, then nudges upward. You check the position each morning the way you check the weather. Out of habit, without anxiety. You're up 6%, then 11. The position is working, you sleep fine. Then comes Friday, October 10th. 3 p.m. Eastern Standard Time. The American stock markets are about to close for the weekend, and Donald Trump posts on Truth Social. 100% tariffs on all Chinese imports. Effective November 1st. Total tariffs on Chinese goods, 130%. The equity markets react immediately. The Nasdaq drops 3.5% before the closing bell. But traditional markets close at 4. Crypto never closes. By 4:30 p.m., Bitcoin is starting to slide. The move feels manageable, a few percent. The kind of dip you've seen a dozen times before. You check your liquidation price. There's still a cushion. You decide to hold. At 8:50 p.m. UTC, something breaks. Later, researchers will pinpoint the exact moment. 2050 UTC, when the cascade entered what analysts called its violent phase. In the next 40 minutes, $6.9 billion in positions are liquidated. Not over days, not over hours. 40 minutes. A rate of $10 billion per hour in forced selling. Machines talking to machines, automated risk engines firing sell orders the moment a price threshold is breached, each liquidation pushing the price lower, triggering the next liquidation, triggering the next. Bitcoin falls from its Friday high of $122,000. It punches through 115, then 110, then 105. It touches $104,782 at its lowest point. A fall of 14.5% in under an hour. Ethereum drops 20%. Solana at its worst loses over 40% of its value. A token called Toncoin briefly trades at 50 cents, down 80%. Some smaller coins, in the chaos of zero liquidity wick drops, momentarily print near zero prices. Your stop loss doesn't fire at the price you set it. In a cascade, there are no buyers at your price. The order book is empty. The machine sells your position at whatever it can get, and whatever it can get is significantly less than you planned for. The notification arrives at 9:17 p.m. Eastern. You read it 3 times. The number doesn't change. You are not alone. In the same window of time, 1.6 million trading accounts received the same message. A retired teacher in Ohio who had put his savings into a leveraged Ethereum position. A 24-year-old in Seoul who had borrowed against his apartment. A trading group in Singapore that had been up 40% on the month. A whale, someone with deep pockets and, some would later speculate, advanced knowledge, who had quietly shorted Bitcoin and Ethereum minutes before the announcement and walked away with an estimated $190 million in profit. The liquidation engine doesn't distinguish. It processes them all the same way. By the time the dust settles on October 11th, the total crypto market capitalization has shed $350 billion. $19.1 billion in leveraged positions have been forcibly closed, 9 times larger than any single-day liquidation event in the entire history of crypto. For perspective, when FTX collapsed in November 2022 and sent the industry into freefall, total liquidations reached $1.6 billion. The COVID crash of March 2020 produced $1.2 billion. This single Friday night produced 19 times what the COVID panic did. In 40 minutes. The weekend is strange. Bitcoin stabilizes. It finds a floor around $105,000, then begins to drift upward. By Monday, it's trading near $115,000. The market recovers. Analysts start talking about the correction being healthy, about leverage being flushed out, about the bull run resuming. You watch it climb back. You do the math. If you'd been able to hold the position for 60 more hours, you would have been nearly flat. 60 hours. That's all the machine didn't give you. The anger phase lasts about a week. You read everything you can find about what happened. You learn about cascade liquidations, how one forced sell creates the conditions for the next, how in moments of extreme fear the order book collapses and there are simply no buyers at any rational price. You learn that a stablecoin on Binance briefly lost its dollar peg during the chaos, that certain exchanges experienced technical glitches as their systems buckled under the volume. You learn that Uniswap, a decentralized exchange, processed over $10 billion in trading volume on October 10th alone, a new single-day record, as arbitrage bots and bargain hunters moved in once the worst was over. None of it changes your number. Then, somewhere in the second week, the anger gives way to something harder and more useful. Not acceptance exactly, more like clarity. You start writing things down, not to process feelings, to build a framework. The first thing you write is this: the liquidation engine was not your enemy. It was a rule you agreed to when you opened the position. You signed a contract that said, if the price falls this far, the machine will close your trade automatically without asking, without delay, without mercy. You knew that. You just didn't believe it would happen to you. The second thing you write, 5 times leverage on a Friday afternoon, heading into a weekend when a geopolitical announcement could drop at any moment, with open interest across the entire market sitting at a record $217 billion. That is not a calculated risk. That is a bet that the world will stay quiet for 60 hours. The world did not stay quiet. The third thing, and this is the one that stays with you, is about the architecture of the crash itself. The $19 billion that disappeared wasn't lost to some external force. It was transferred. The exchanges kept their fees, the short sellers collected their profits, the liquidity providers who stepped in after the bottom took their spread. The money moved. It always moves. The question is always which direction it moves relative to your position. You open a new account 3 weeks later, spot only, no leverage. You buy a small position in Bitcoin at $112,000. No stop loss that can be triggered by a 40-minute cascade. No liquidation price. No machine that can close your position while you sleep. The number on the screen is smaller than it was before, but it's yours. Have you ever been liquidated or come close? Drop it in the comments. I want to know what October 10th looked like from where you were sitting.